听见资本本期视频为您带来的是大摩根士丹利在3月31日录制的观点。当时关税问题搞得人心惶惶，股市投资者都绷紧了神经。摩根士丹利一位首席策略师警告说，即将宣布的关税措施很可能只是谈判的起点，而不是最终结果。这意味着什么？意味着未来好几个月政策不确定性和经济增长的风险可能一直都在。市场情绪和股价短期内就算见底也难有大起色。具体来看，策略师预计美国政府可能会继续重点针对中国加征关税，但对欧洲、墨西哥、加拿大的特定产品关税或许会有所缓和，其他亚洲经济体也可能面临新的关税。虽然这不一定会阻止大盘指数上涨，特别是如果墨西哥和加拿大能获得一些豁免，但短期内市场的上涨空间恐怕有限。就算消息面好于预期，上半年想创新高也基本没戏，除非经济数据出现明显好转，但这至少要等到下半年了。那什么情况会导致市场大跌呢？策略师认为，需要关税结果比预想的更糟，同时关键经济数据，特别是就业数据显著恶化才行。对于投资者来说，现在该怎么办？关键在于选股，那些有能力转嫁成本、有强大溢价能力、供应链布局多元的大型优质公司才更有可能跑赢大盘。具体到行业，资本品行业因为定价能力强，可能更有优势，而非必需消费品行业则风险较大。总之，现在是时候关注那些真正有实力、能有效规避风险的公司了。接下来是英文会议的全部内容。如果您需要我的投研助理人工校对的中文文本，您可以在频道的 Patreon 上获取。
Welcome to Thoughts on the Market. I'm Mike Wilson, Morgan Stanley CIO and Chief U.S. Equity Strategist. Today on the podcast, our views on tariffs and the implication for equity markets. It's Monday, March 31st at 11:30 a.m. in New York, so let's get after it. Over the past few weeks, tariffs have moved front and center for equity investors. While the reciprocal tariff announcement expected on April 2nd should offer some incremental clarity on tariff rates and countries or products in scope, we view it as a maximalist starting point ahead of bilateral negotiations as opposed to a clearing event. This means policy uncertainty and growth risks are likely to persist for at least several more months, even if it marks a short-term low for sentiment and stock prices. In the baseline for April 2nd, our policy strategists see the administration focusing on a continued ramp higher in the tariff rate on China, while product-specific tariffs on Europe, Mexico, and Canada could see some de-escalation based on the USMCA signed during Trump's first term. Additional tariffs on multiple Asia economies and products are also possible. Timing is another consideration. The administration has said it plans to announce some tariffs for implementation on April 2nd, while others are to be implemented later, signaling a path for negotiations. However, this is a low-conviction view given the amount of latitude the president has on this issue. We don't think this baseline scenario prevents upside progress at the index level, as an off-ramp for Mexico and Canada would help to counter some of the risk from moderately higher China tariffs. Furthermore, product-level tariffs on the EU and certain Asia economies, like Vietnam, are likely to be more impactful on a sector basis. Having said that, the S&P 500 upside is likely capped at 58 to 5,900 in the near term, even if we get a less onerous than expected announcement. Such an outcome would likely bring no immediate additional increase in the tariff rate on China, more modest or targeted tariffs on EU products than our base case, an extended USMCA exemption for Mexico and Canada, and very narrow tariffs on other Asia economies. No matter what the outcome is on Wednesday, we think new highs for the S&P 500 are out of the question in the first half of the year, unless there's a clear reacceleration in earnings revision breadth, something we believe is very unlikely until the third or fourth quarter. Conversely, to get a sustained break of the low end of our first half range, we would need to see more severe April 2nd tariff outcome than our base case and a meaningful deterioration in the hard economic data, especially labor markets. This is perhaps the outcome the market was starting to price on Friday and this morning. Looking at the stock level, companies that can mitigate the risk of tariffs are likely to outperform. Key strategies here include the ability to raise price, currency hedging, redirecting products to markets without tariffs, inventory stockpiling, and diversifying supply chains geographically. All these strategies involve trade-offs or costs, but those companies that can do it effectively should see better performance. In short, it's typically companies with scale and strong negotiating power with its suppliers and customers. This all leads us back to large cap quality as the key factor to focus on when picking stocks. At the sector level, capital goods is well positioned given its stronger pricing power, while consumer discretionary goods appears to be in the weakest position. Bottom line, stay up the quality and size curve with a bias towards companies with good mitigation strategies, and see our research for more details. Thanks for listening. If you enjoy the podcast, leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.